You are listening to ChartingWealth.com's weekly review and forecast for the week beginning Monday, the 3rd of October, 2016. Let's jump right into the markets. We see that the week ended on a down note for our three big indexes. However, we are still in a confirmed down move on our weekly chart. We still have a weekly trend line that is trending down, and the MACD crossed over going down back on the week ending the 9th of September, and it went down the following week and then slid sideways the last 2 weeks, but we are still in a confirmed down move. Our derivative oscillator continued to gain energy, and the MACD continued to move down. So the total market down move. Let's look quickly at what went on during the week. Looking at our daily chart, we saw that the market opened on Monday the 26th with a big down move and then slid sideways, trending up a little bit throughout the rest of the week, but never recovered where it started moving down on Monday. Daily chart is still in a confirmed up move, but the derivative oscillator is losing a lot of its energy. So mark on your charts, those of you who follow us with the daily market worksheet, and if you haven't listened to that great training we put out this last week, I think it's going to be another one of our award-winning trainings. Please do so. You can find it both at YouTube and at Charting Wealth, and we also uploaded it to iTunes, but you'll really get the most of it at YouTube or at the website. So please go there, listen to that. You'll see how I actually fill that out and how I use it. And if you want to advance rapidly in learning how to read charts and really become a market master quickly, do that on a daily basis. You need to know where the weekly chart is and make sure that you do, as you listen to this broadcast, this particular one, go ahead and note for the week where you are on the weekly trend. And the weekly trend on IYY is down. Now let's go to the S&P 500. What's going on there? Well, it's still in a confirmed down move. MACD is still moving down, not as strongly as it was, say, back on the weeks between the 9th and the 16th of September. Leveled out a little more, but it is still trending down. It did close above our 2-day trend line at the end of the week, but derivative oscillator continued to gain down energy, and we do have a confirmed down move on the S&P 500 as shown by SPY, which is an exchange-traded fund that tracks the total market. Let's look at what went on during the week. Similar to what happened with IYY, big down move on Monday, but the market did move very hard to recover and actually did toward the end of the week. Crossed over going up back on the 23rd of September on the daily chart and has been, for the most part, sliding sideways since the 22nd, boomed up on the 22nd and then sort of lost that energy and slid sideways since then. But again, confirmed down move on the weekly chart. We saw the market end up above that down move on Monday on the S&P 500. Those 500 big amount of volume in the market, big companies. That's where the market ended up at the end of the week. Okay, now let's go back to our weekly chart, and we're going to check out the last of our indexes before we go to gold. That was the Qs. It was up 0.75% for the day. Now the Qs, unlike the total market in the S&P 500, the Qs has been in a confirmed up move on the weekly chart since the 8th of July. Qs bounded up for many weeks, then slid sideways and started moving up again over the last 2 weeks. So the Qs, the NASDAQ 100, the tech stocks, confirmed up move on the weekly chart, closed well above the weekly trend line. What's interesting is, as the Qs started sliding sideways starting on the week ending the 26th of August, started losing energy in the derivative oscillator, and it has petered off quite a bit. However, the MACD continues to move up, as does the signal line. They're paralleling each other. They're not moving toward a cross at this point. Confirmed up move. Now, let's look at what happened on the daily chart throughout the week. Monday, just like our other two indexes, was a down day. Tuesday, a spinning top, sort of indecision on that day. Up day on Wednesday. down day on Thursday, another up day on Friday. So again, it looks like the Qs actually recovered and above. So it moved down big time on Monday, but did recover by the end of the week. Confirmed up move on the daily chart. That daily chart crossed over going back up on the 21st of September. So mark on your charts, Qs is continuing to move up on the weekly chart. It is confirmed up move on that weekly chart. Now, lastly, we're going to go to gold, getting away from our indexes, heading off to gold. It was down 0.34% for the day. Gold crossed over going down back on the 19th of August and has been going down or sliding sideways since then. Over the last 2 weeks, gold has been showing us spinning green tops, means lots of indecision as the MACD and signal line have continued to trundle down. Derivative oscillator actually gained more downward momentum throughout the course of the week. It had lost some in the week prior, ending the 23rd, but the week ending the 30th, derivative oscillator continued down. The MACD arched over, going down even further. Now, if we look intra-day, what happened, intra-week, we look at what happened on Monday. This Monday continued the up movement that started all the way back on the prior week on Wednesday the 21st. Then gold started blowing off that energy and was down Tuesday, Wednesday, Thursday. And we've got a bit of a green up candle on Friday. And again, that's our Heiken Ashi type candlestick crossed over, going down on Friday. Derivative oscillator flipped about the same time that the MACD crossed over, going down. So gold turned around and paralleled that down movement. Those of you who've been following gold know that our 2-day chart works as both a trading and a trigger chart, and those who have been using that in their virtual trades have been doing quite well, and those who've been doing that are actually in a gold trade, an inverse gold trade right now. That is where we are. So again, make sure you mark for your daily market worksheet that gold continues in a confirmed down move. Okay, now we're going to get away from our charts. We do this only once a week. Again, we urge you over and over, don't get caught up in the noise of the market. Follow the charts, not the media noise. Well, we listen to the media. We actually listen to the news once a week, and that's when we go back and see what moved the market and what might be moving the market in the coming week. It's so important to pay attention to the charts and not let the news about the market draw you in and confuse you. Again, we try over and over and over again to use Occam's razor. That is, we want to focus on the simplest things that we can that help us the most to be able to figure out what's going on. We want to keep everything as simple as we possibly can. So let's talk about what global news affected us. U.S. economic growth ended up being revised higher, just slightly. Economic growth in the second quarter in the U.S., and that's put out by the U.S. Bureau of Economic Analysis, we found that they revised growth in the second quarter slightly higher. Gross domestic product expanded by a revised 1.4%. Now that's up from the earlier estimate of 1.1%. Early indicators are showing that growth picked up further in the third quarter, and the U.S. Federal Reserve estimates it's going to average about 2.5% for the quarter. That quarter, of course, ended on Friday. We also we start looking at other things around the world. Oil producers have agreed on a need for a cut. This is OPEC, and they've set a production cap. They want to try to reduce the surplus oil in the market and drive the price back up. But again, as it has been for many, many years, it's unclear which member countries are going to be exempt from these production quotas. And, we all know that OPEC has a history of failing to adhere to these production quotas. So what does the market say? It's extremely skeptical about anything really happening there. Now, what's going on in Europe? Of course, when the Brexit vote took place and the Brits good for them, decided to exit out of the European Union. It sent shockwaves all through the Eurozone. Well, they're finally getting used to it. The shock of that seems to be fading. Economic sentiment ended up rising, particularly in Germany, where business confidence is now the highest since May of 2014. We'll see how all that shakes out. What's going on in the U.S. with Congress? Well, they finally approved a continuing resolution to get them through the election season. They're going to fund the government through the 9th of December. Then I guess they'll decide how much money to continue to borrow, to spend that we don't have as we spend our children's futures away. As long as people are willing to take our money, I guess we're willing to print it. And then what's happening now, this is a very interesting thing. The World Trade Organization has announced that global trade is growing slower than the world economy. Now that is a very, very troubling thing. Trade is expanding at 1.7% this year, apparently, while global GDP is expected to expand by 2.2%. Well, what is that telling us? Well, it's a serious wake-up call that trade is in peril. And whenever you have something as weird as slowing growth in the world economy, with trade expanding at a slower rate than GDP, you've got some real problems with all the globalization that you've heard us talking about. And again, headwind after headwind. So nothing is surprising there, but please, again, that's why you need to learn how to read these charts. Being able to read these charts when the worst happens and bad things start to occur, you'll know how to get out and exit trades. You'll know how to get into inverse trades, or at least keep your money on the sidelines. That's why we want you to practice with us. Open up a virtual trading account. Practice with us every day. And when you get good at this, you can make your own decisions. We're not a stock calling service. We're not going to tell you what to do. We don't get paid for that. We don't get paid anything. We're not about to do that for you. We want you to learn how to do this, develop your own system based upon a lot of the things we teach you and other things you learn, and then you can make up your own mind. But if you don't do this, you're never going to get the knowledge base to be able to be self-directed and have any clue as to what you're doing. Lastly, what's going on with European banks being under pressure? Deutsche Bank is under severe pressure again this week. They've got this looming legal settlement with the U.S. government over the mortgage-backed securities sales during the mid-2000s and the housing bubble. You're just going to continue to see the negative interest rates in Europe putting pressure on the banking sector as a whole. And whatever happens with Deutsche Bank, if it implodes, it could start a chain reaction of events across the world. So again, pay attention. Learn this knowledge base so that when the worst happens or the best happens, you can make the most of it, either protecting yourself or making money as the market flies up. So again, we let the charts lead us. We don't pontificate. We don't turn around and try to manage the future. You can't. You've got to be able to see what's going on clearly, not being confused by the media noise, but being able to see it in the charts. Read those charts, follow those charts. They're going to lead you in the right direction. Okay, what's coming up in the week ahead? Well, not a whole lot news-wise unless there's some really, really bad news. But as far as what goes on Monday the 3rd, the global manufacturing purchasers indices are going to be released. If it's really good or really bad, yes, it can affect the market some if the market wants it to. The global service sector PMIs are going to be reported on Wednesday. Again, unless it's real bad or real good, not going to be much to it. The ECB's September meeting notes their minutes are going to be released on Thursday the 6th. Again, unless it's something really bad or really, really good, which, is not all that it's not likely to be really, really good stuff. It could be some bad things, but it's got to be really bad to affect our markets a lot. And then on Friday, U.S. employment report. And again, pay attention to that some, probably more than most anything else. If it's really, really good or really, really bad, you might see something happen toward the end of the week. Folks, that's where we are as we end the week. We so appreciate you being with us as we jump into this new week. If you want to help us out, please, by all means, go to iTunes, subscribe to our podcast, say something nice about us, give us a 5-star rating. Also, you want to be on the cutting edge of the stuff we're putting out, go to YouTube, subscribe to our channel. We appreciate that so much. And of course, you want to be on the very cutting edge of things, you need to go to our website, chartingwealth.com, sign up for our newsletter. You'll receive the weekly review and forecast. When it is put out every week, you'll also receive our daily reviews. What we ask you to do, sit down, print yourself out several copies of the blank daily market worksheet, listen to that new recording, that new video that we've put out, and if you want to supercharge your development in reading charts, what you've got to do is you've got to fill that out on a daily basis. It will be worth its weight in gold to you in what you learn by putting pen or pencil to paper. It will just, the dividends from that are going to be incredible because it'll really make you think about what's going on, why you're saying what you're saying, and it'll help you with your own forecasting and seeing how you get better as you go along. It'll give you it'll be like a history book as you keep these, and it'll help you focus. Thank you so much. God bless you. We love to hear from you. Tell us what you need, what you're learning, what you're thinking about. You can always write us at chartingwealth.com. We love your comments on Facebook, Twitter, Instagram, YouTube. Wherever you are, we're there too. God bless you. Take care from chartingwealth.com.